Hello and welcome to Fin24. The question on everybody's mind right now is, can Finance Minister Malusi Gigaba's inaugural mid-term budget policy statement lead to a ratings downgrade? And what will that essentially mean? With us in studio, we have Abdulaziz Davids from Kagiso Asset Management. Welcome, Abdulaziz.
Thank you.
Abdulaziz, let's get right to it.
Yeah.
Does the minister's mid-term budget policy statement have the potential to lead to a ratings downgrade?
Yes, certainly we think it has the potential to do that. Clearly, if one looks at the statement, it's not just for now, it's basically government forecast for the next 3 years as well. And I think the critical areas that we're looking at is potential revenue shortfalls. Clearly, we know tax collections has been below par. And then secondly, and very importantly, and we've all known about this in the last couple of months, is really around expenditure and funding of the state-owned enterprises. If there's any slippage on that side, I think there's a real risk of that happening.
How do you see the state-owned enterprises like Eskom and SAA featuring in the budget statement?
Yeah. Aside from the well-known Gupta leaks that we've seen over the last couple of months, I think the key question for us is, I mean, we've seen it with SAA, the 3 billion rand that has been injected more recently. We know the travails of at Eskom, and clearly, you know, the issue is not just around the funding; it's the liquidity situation around these entities. So the risk that we're running is that there's more government funding that goes towards SAA, Eskom, and potentially some of the other. I mean, there's clearly the infrastructure spending as well. So we think that there's a real risk that a lot more funding is required by these entities. And aside from potential privatization of state-owned assets, there is no real way to fund this other than tax collections. And with a weak economy, there's a real risk that you know, the poor consumer has been battered to death with taxes already. So there's a risk that you know, growth undershoots again, because additional taxes might just kill off any prospects of future growth that we have.
What would you say Minister Gigaba needs to do in order to let this midterm budget policy statement be a catalyst for growth?
Yeah.
Because we need to start growing the economy. So
That's right.
how do we start growing the economy, and how can Minister Gigaba use tomorrow's budget statement to do that?
Yeah. That's a critical question, and I don't envy him in terms of the task at hand, because clearly the key ingredient that we need for higher growth is confidence. We've seen it with all economic indicators, from business confidence to consumer confidence. There's a massive lack of confidence, and we all know why. I mean, the political climate just fosters and engenders itself to a lack of confidence. So businesses in particular need to have a real sense that they can invest with confidence. I think on our projections, there's a potential 2% additional GDP growth that we can get with a return to confidence and capital investment in the country. So I think the clues to that is that for greater confidence, we need certainty around future taxes. We need certainty, I mean, the mineral resources side of things, certainty of tenure for mining companies, for example. We don't expect him to announce these things in tomorrow's statement, but any clues that, you know, guide towards that would be very beneficial and would be a real catalyst for growth.
What is your economic outlook for the rest of the year? What do you foresee for the rest of the year, taking into the midterm budget policy statement and the ANC conference taking place in December? What is your outlook?
Yeah, unfortunately, we're sort of in this twilight zone between now and the ANC conference, because I think a lot of economic sort of forecasts and, you know, expectations hinges around the outcome of that December conference. And we've modeled sort of a low road and a high road scenario. Our low road scenario is clearly almost a slightly worse outlook from where we are currently, which is sub 1% GDP growth in real terms. Clearly, anything that sort of enforces that view, either through tomorrow's budget statement or through a negative outcome in terms of the elective conference, would just sort of enforces that and entrenches that subpar growth rate. On the positive side, I think a key catalyst potentially would be a positive outcome in terms of that elective conference. As I said, we know for a fact that there's a lot of capital on the sidelines. Businesses have been hoarding cash, they're sitting on cash piles. So if there's any inkling of positivity in terms of an outcome, in terms of the politics or in terms of the budget statement, that could foster greater confidence, and that will mean increased sort of confidence and investment in the economy as well. In that scenario, we could well see 1.5% to 2% growth rate for next year. Unfortunately, we're already late in this year, it's already October, so we've got 2 months of the calendar year. In terms of the fiscal year, which runs to March, it's about 5 months. So I think it's very difficult to see us growing above 1% for the remainder of this year. We already, if you look at the first 2 quarters and first 3 quarters of this year, we're looking at sub 0.7% growth rate. So you really need to shoot the lights out in the final quarter to get above 1% growth rate for the year.
In a nutshell, if there was 1 or 2 things that you expect, what would you expect as an ordinary South African from Minister Gigaba tomorrow?
There's what I expect in terms of my heart, and then they say what I expect in terms of my head.
Let's have a go at both.
In terms of my heart, clearly, you would expect, some fiscal discipline in terms of not letting our government debt blow out further. Potential, I mean, in the last sort of year, we didn't receive massive sort of tax relief, potential tax relief. But my head tells me there's very little room for maneuverability in terms of tax relief for the consumer and for the man in the street. So I think, unfortunately, in terms of expectations, those are all potentially negative. We expect a hint towards additional taxes, be it a VAT increase or a wealth tax. And on the expenditure side, I think there has to be some contingency and some allowance for further state-owned enterprise sort of funding and bailouts, as we've seen with SAA as well.